thank you so much for coming, Michael. You're the president and CEO of MSF Capital Advisors,
Yes.
which is a global multifamily company, and you're the expert not only in the U.S. equities, U.S. economy and the markets, also the emerging markets. Wonderful.
Yes.
Let's start with the U.S.
Sure.
Shall we? Well, as the headlines say, Europe stocks rise as the bonds drop. The same here. Do you think there's a bubble in the equity markets or the bonds market? Which side are you on?
Well, I think equities is obviously trading at a pretty high PDE ratio, but I think there's a lot of opportunities in the U.S. in the equities market. We focus in the U.S. market more on the small cap and micro cap stocks, and actually the Russell 2000 has actually outperformed the S&P this year, and we're very optimistic in talking to a lot of companies, especially in the small cap space, about their growth potential in the next couple of years. Since 2000, they've obviously had a rough 2008, 2009, and even in 2010. But since 2010, they've had between 20 and 40% growth year after year, and are projecting that type of growth for 2014 and even 2015. So we're very bullish on small cap and even micro cap stocks here in the U.S. I think large cap stocks here will have some problems with some continuing problems in Europe, and obviously the continued slowdown in Asia. The exception to that, I believe, is the consumer stocks. As you saw, Procter & Gamble had very good results. And I think part of that is because in the emerging markets, we're seeing kind of a shift to a consumer-oriented economy, and I think that will benefit large cap U.S. consumer companies. So.
But they're talking about P&G and other kind of defensive, right? Stocks, that there is a shift from the defensive to the cyclical. Is that right? Do you agree with this?
I think to some degree. I wouldn't go all the way in that, but I think that we are looking at more on the cyclical side than on the defensive side.
Okay, and how about some people talking about S&P 500? And also all the indices, they need an adjustment. Some of them are expecting that any second, any minute. But on the other hand, other people say that inflation adjusted, we're still 25% down from where S&P 500 should be. Which one do you agree with?
I think there's still room to grow.
How much room? At least by the end of 2030.
I think it could easily rise another 10% or so. I mean, the S&P stocks, if you record profits, and I think if you look at the indices from this year compared to last year,
right.
The revenue growth and the earnings profits and all that are much higher and are projected to go even higher, at least into the third quarter of 2013 and possibly first quarter of 2014. So I think there is some room for growth. I think especially in the consumer product companies, the technology companies, in certain industries, not in all.
Yesterday, the stock markets went down with the assumption that, also with this, his speech from Plosser, Fed's head from Philadelphia, Charles Plosser, said that there's not much resources left for the Fed to continue its stimulus. It might reduce. We will reach the 6.5% unemployment by 2014. So everyone took it as Fed might have an exit strategy before 2013. The rest of the world believes they won't. But do you think there will be an exit strategy this year?
I don't think this year, but I think there has to be a gradual exit strategy. I think one thing people talk about inflation. I would be more concerned about deflation in the short term than inflation. And I think the Fed will continue to have a bond buying. I think it's $85 billion a month now. Yes. I don't think that'll continue at that rate. I think it'll probably start to drop, but I don't see the Fed all of a sudden go in a sense cold turkey and they couldn't, because it would create too much of a vacuum. Right now they are pretty much the only buyers of Treasury bonds. So I think they will kind of wean themselves off of it. When that'll happen, I couldn't give you a guess, but I think they're going to you know, the economy is like a fine-tuned instrument. There's a lot of dials you got to turn, and they will continue to turn those dials and see how the economy and see how the investors react.
And the G7 leaders are meeting today at the UK. They were meeting since the beginning of the day. And from India to Poland, not only Fed, all the global central bankers, they are working on the extra stimulus, deflation fighting. When you said that Japan did his part. So with that, in that regards, do you think they're going to take more actions? Do you expect more coming from the global central bankers?
Well, I think that, you know, the central bankers are going to try to stimulate their economies. And as I said, there's still, as I mentioned earlier, there are still problems in Europe. I think they actually had probably, from a structural point of view, probably had even a greater problem than we had back in 2008. So I still see the central banks, you know, using, whether increasing or maintaining the same rate of stimulus in Europe or in the rest of the world as well.
The rest of the world. You told me earlier that you are very focused also in the emerging markets.
That's correct.
So which parts in the rest of the world in the emerging markets are you concentrated or do you find attractive?
No, we actually are still somewhat bullish, for example, on Asia. Our focus in Asia, again, has been more on consumer, with a growing middle class, both in China. I'm at a Latin American event now, in Brazil particularly. And we also have invested in frontier markets. So we're in Africa. I particularly like Africa a lot. If you look at the demographics of Africa, it's a very young, it's a very educated, in many parts, not in all parts, but in many parts of Africa. And in the long term, I see Africa as a very attractive. We're also in Central Asia, and I'm a big bull on the emerging markets. But again, I think. Are
you overweight in the emerging market?
Yeah, we are overweight in the emerging markets. I mean, we're opportunistic investors in general, and we see opportunities in the U.S. in the small cap and micro cap, and we see opportunities still in the emerging markets. I think, though, those opportunities have changed, and I think that's where our focus is, looking at the change.
Not only you have expertise in financial field for 40 years, you also have in the legal area. And this is my last question, 10 seconds. Where do you see the gap going between Wall Street and Main Street?
Well, I think, look, Main Street was pretty burned in 2008. And I think Wall Street needs to do a better job of educating the public about, you know, the risks involved, the products involved, the services involved, and we try to do that with our own clients as best as we can. And we try to. I have a very simple rule. It's called "Keep it simple, stupid," and I try to make it as simple so that people really understand what they're investing in. And I think that's the key.
Thank you
is
so
education.
Much.
Thank you.
I appreciate you having me on.
And
thank you for your valuable insights. Yes.